Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, American industrial activity is waning from a good level, and China's is rising from a weak level. Analysts are bracing for very negative American car sales reports for September, with some seeing a decline of more than 10% year on year. That is showing up in factory activity data. The influential Chicago Regional Purchasing Managers Index has drifted back into contraction. And the September update of the Dallas Fed Regional Survey, which has been one of the most optimistic of this series, is still generally positive, but many indicators, including the current General Business Outlook one, are sliding. And China has reported its official factory PMI for September, and although it's still contracting, the degrade is now quite minor. They will take that as a win in the current situation. Better for them, their services PMI is stable at a healthy expansion. These official surveys actually have credibility because the independent private sector sets all show better situations. In fact, the Caixin PMI rose in September to its highest level in 20 months, showing a solid expansion amongst its surveyed firms. In Japan, they've just increased their GST to 10%, and this has encouraged a rush to buy big-ticket consumer items in the past few weeks. But industrial output there isn't flash, according to their official statistics, down 4.7% year on year in August. In the EU, their jobless rate ticked lower in August, now down to 7.4%, with a range from 17% in Greece down to 2% in the Czech Republic. And new research in Australia shows that 38% of their exports are sold to China. The political tensions between the two countries don't seem to be inhibiting trade. For perspective, the same relationship has New Zealand far less dependent, selling 26% of our exports to China in the year to August. And this morning, the US Treasury 10-year yield is little changed at 1.68%. Their 2-10 curve is positive now at 6 basis points. Gold is down sharply, down $27 to $1,469 an ounce. And US oil prices are also lower today, down more than $1, now just under $55 a barrel, and Brent benchmark is just down to under $61 a barrel. And the Kiwi dollar is weaker today, now at 62.6 US cents. On the cross rates, we're down to 92.8 Aussie cents, and against the euro, 57.4 euro cents. That puts the trade-weighted index back down to just on 68.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.